private equity, right? So I want some healthy conversation, or I would like, communication from both the sides, not only from my side. So you can unmute as and when required and discuss on those terms. Okay. Yep. So when we say private equity, guys, okay, first of all, let me brief about what topics that we're gonna cover today. So that's how we'll plan it out even. So introduction of private equity fund, introduction of private equity funds, right? Then the important is what are the different types of funds here that you would see under private equity, different types of funds. Structure of P fund, structure of P fund, then LP and GP and their roles and responsibilities that we'll see at the moment, right? Or if we get any time, then we'll also look for important documentation. Important docs like SPA, security purchase agreement, then LPA, limited partnership agreement, global commitment agreements or letters, PPM, private placement memorandum, all right, term sheet. So if we get time, then we'll also discuss about this portion also. But let's see, at least we'll try to cover introduction of P, different types of funds, structure of funds, or the LP and GP structure. Okay. So what do you know about P, guys? Private equity. When we say private equity, so what do you know about private equity? Anyone would like to discuss what is private equity, how it works, or at least what do you understand about private equity when we say private equity? Come on. Anyone would like to take this opportunity? Or it is something new for you? Okay, anyways, I'll simplify it. When
Investing
say,
in companies, yes.
yes, Rajan?
Yeah, investing mostly in private companies. So private, as the name initially suggests. So
Private companies. Okay.
yeah, unlisted companies and
Hmm.
investing in illiquid assets, startups.
Hmm.
I
Okay.
think I think a private equity is I think basically the investor initially the new business when anyone start the new business they need a capital, so they can invest their own capital and they can find the angel investor, and they can find the angel investor means someone they know very well, and from there and there'll be some people who can see the business potential and all,
Hmm.
and they can see that business if they invest that in future no that business can grow and they can get out profit out of that, and there's one kind of investor they give their money to the business.
Okay.
So I think that is my I think understanding about
Okay. Yeah, absolutely. I mean, it's almost there. Okay. So, private equity means private and equity. Both are two different words. Okay. Private and equity. So, I'll simplify it. Private means private group of people. Private group of people who are ready to take a risk, ready to take a risk, right? Same people they want to invest in private companies or privately or companies, it can be privatized in future, or companies it can be privatized in future, right? It can be privatized in future. So simple, private group of people, they are ready to, or they are willing to take a risk, they are willing to take a risk, and also they want to invest in a private companies or companies, it can be privatized in the near future. So they want to invest in those companies through equity, so here equity it can be, so it means they can sign agreement, kind of SPA, security purchase agreement, where board can sign the agreement, security purchase agreement with that particular group of people, right? With that group of people, or they can also come up with the PPM, private placement memorandum. They can also plan out for a PPM also. It means they raise funding through PPM and they invest into it, right? Or else they can also look for open options, like let's assume at open option, it means directly they can purchase the preference equity, or also sometime common equity as well, common equity with conditions. And if the business nature is something different, where you are not able to see the equity or preference equity or SP or PPM kind of things, then let's say I'm talking about banking business, then in that case, so you might see same that the structure or everything would be remain same, instead preference equity. So you might see instruments like ABS, asset backend securities, mortgage backend securities, RMBS, or any other obligation also that they can sign. So now you can just relate private group of people, right, who are ready to invest, who are ready to take a risk, right, ready to take a risk, and they want to invest in only private companies or companies it can be privatized in near future, or else the strategy can be different also. It's not only that only they'll invest in private companies. I have seen many funds who also invest in public companies as well through different bonds and the other obligations, so they can directly provide funding to the businesses also. That also happened, right? So in short, so you would see this structure, and where when we say equity, it means ownership. Always private group of people, they look for ownership. When we say equity, it means it's a ownership, guys. Ownership. So where they can grab position in the management or maybe in the capital of the business. So that's how you would see private equity fund. But private equity. But what about fund? So this here we have only discussed about private equity. And if you see any institution, kind of, let's say asset management company or any investment manager, fund manager, or institution, if invite group of people to come together, if that institution invite group of people to come together and to invest the companies, like private companies or any companies, or as per their stated already defined objectives, right, defined objectives, if that AMC can help or investment manager can help, then that institutions we call it as private equity in a firm, private equity fund or firm, private equity fund or firm. And here you would see complete word private equity fund, then private equity. Why fund? Because all are different words, private equity and fund. So if you want private equity, then you will have to raise fund, right? And if you want to invest in equity, then also you require private people as a partner, then only you can sign this deal, otherwise it is not possible at all. So that's how this structure works. Any question that you have with regards to this? And I see after this you can prepare assignment in this way and submit it to me if you want. Prepare it. So you may expect question like this: what is private equity, or how that private equity works. Here you may expect two questions, right? What is private equity, or what do you understand about private equity? So you should answer like this. And apart from that, you may also expect question like, what is the life cycle of private equity fund? Life cycle of PE fund. Life cycle of PE fund. Whether it is a private equity fund, whether it is any any hedge fund, mutual fund. See, life cycle never changes. Life cycle never changes. What we do here, first of all, we announce the scheme, right?
Yes, sir. Launch the fund, yeah.
Then to raise the fund. So after raise, we invest. Financial instruments. Generate alpha. Alpha means income. Then again to distribute. To distribute income. And capital. Close the scheme and again announce new one. Close the same scheme and announce the new one. Yesterday just we had one PIF fund, which is for private equity loans. We got notification that funds got liquidated and in the month of April the new scheme will be announced, and if anything is pending there, any assets or liabilities if you see on this particular fund, this will transfer to the new series. This was PIF 1. PIF 1, private investment fund. It was PIF 1, so they wanted to create PIF 2 and they just wanted to close it out. Fund manager wanted to close out this PIF 1 and want to relaunch 2. Why the PIF that wanted to close? Because almost the fund was since last 2 to 3 years, and every 2 to 3 years or 4 years, so sometimes, so it's better to liquidate in cash and again reinvest it, or at least to transfer the existing assets and liabilities to new one, or create a new one to have a better transparency in place. So that's what they do it. So it means this one will liquidate and new funds will launch. This also happened, and that's what you can relate with this cycle. Announce, raise, invest, generate, distribute, close, and whatever assets and liabilities you would see here, that you need to transfer it here, and again this fund will into operations, and here you can provide accounting treatment to this PIF 2 then, right? So it's a very important one to understand the logic of this life cycle as well. Why? Sometime it can be even a regulatory requirement also, because here with the private equity every 2 to 3 years it's a mandate to liquidate the fund. 2 to 3 years, within a 2 to 3 years once in a time you will have to liquidate all your funds, whatever funds that you have, and then rebuild that funds with the, even you would see changes in the fees also, fees or catch up or carried interest or commitment or whatever fees that you guys are paying at the moment. So you might change in that also it can be changed in the LPA, means limited partnership agreement, or the any agreement if you have in a place, then you might see change in those terms as well. With the PIF one, when the fund was invested, let's say it was around 1.5% fees, so here you might see 2% with the new funds. Why? That is depends on, see why the try to understand it, even why fund charges management fees. Why fund charges management fees? You guys expect 10% to 20% in between hike every year from a same company, from same fund admin house, right? From same fund admin house, you salary hike that you expect 10 to 15. It means how then fund admin can bear the expenses then? How that fund admin will adjust the expenses? Let's say at the moment if they are charging 1.5% management fees, then they can increase their fees up to 2%. Why? The eventually the cost, operating cost, gonna high, right? So there is an interlinkage. Management fees is nothing but it is a basic cost, basic operating cost that comes to manage the operating activities. Because management, it means it is a part of operating activities, it is not the financing activities, even it is not investing activities, it is a operating activities. It means 2% or 3%, that is minimum required to manage that business activities, and that minimum baseline he would say across all the sectors. Take the example of any sectors, take the example of loans, take the example of even that government securities, take the example of any instrument, you would see minimum rate of return at least that matches the inflation, and 2% which is kind of inflation, where that basic cost which is incurred to operate that particular company or portfolio or investment, right? So that's how you can link up. If you are expecting high salaries, automatically management fees goes high, and that's the reason it becomes essential to liquidate the previous schemes and dissolve this partnership agreement, reform the partnership agreement with new terms. And that's what this life cycle plays a very crucial role to mitigate or to manage or to eliminate the operational risk from that particular fund business. Otherwise that doesn't make sense. What if, let's assume it, we signed agreement in 2010, we have a one fund, we have a fund, let's say PIF fund, we have it, we signed this agreement in 2010, and now let's say that time we okay or convinced with 5%, 0.5% management fees. And for a same fund management, there are other companies as well. Let's take the example of Apex. Apex is charging around 2.5%. Why? They signed the new deal and they got the deal where they are charging 2.5% management fees. And here GMT AMC only charging this one. Why? The reason is they have a SPA in place, or let's say LPA in place, not SPA. LPA in place, limited partnership agreement in place, where partners already agreed with 0.5%, and that's the reason here they are not allowed, or this agreement is not allowing to increase this base cost. Then trust me, with this particular fund, no one will pay high salaries to you. Whether you leave the workplace, whether you joined or you work there or not, that's the different story. But here nobody can afford high salaries and all. As simple as that. The reason is every year the way we expect high salaries and packages, that is the base cost, management fees, it means base cost. And here liquidation come into picture, where they can liquidate this one, and they'll also analyze the competitors, the fees and structure, everything, and on the basis of that they can reform the new partnership, LPA, limited partnership agreement, and they can sign new deal for the same funds, or maybe assets also, that you would see increase and decrease in assets also. That depends on the partners or investors. So it means this life cycle again. Why I'm giving you this multiple examples in an interview also, that you can refer same. And while working on those funds, when you see the liquidation notice for a particular fund or to form a new fund series and all, so you can easily link all this. This life cycle plays a very crucial role in fund business, right? This life cycle plays a very crucial role in this particular business. So I'm sure now, so you got a clarity about this, what is private equity fund, or what is private equity, or what is life cycle of a fund. So any question, any doubt, anything that you would like to ask with regards to the same?
Yeah, I have a question. What do you mean by private group of people? Like,
Private group of people, it means people like us. Let's say in India, so you should have at least 1 CR to invest in private equity, right? So here private people, it means people like us who are capable or eligible as per the Alternative Investment Management Act, Alternative Investment Fund Management Act. If you have a capacity to invest, then you can reach out to the funds, and that's what I said private. If I take the example of mutual fund, so people like us who can easily afford 500, 600, 1000, right? Monthly
yeah,
SIP, there would be different schemes who can invest into funds. But if I take the example of private equity fund or hedge funds, there is a cap already defined. So you should have a minimum 1 CR, then only you can invest in private equity funds. So like let's say if you want to build 100 crore portfolio, then you can invite 100 people and you can build 100 crore portfolio, right? So those would be a private group of people. If your target or pool target is 100 CR or 10 million, then you can invite 100 people, 100, only specific 100 people. You can evaluate their risk, everything, risk appetite, income, everything, and then you can invite 100 private people. Private, it means people who are eligible to invest as per the Investment Act or regulation. Everyone cannot invest in private equity if you don't have a capacity, or if you don't have a available fund, or your total assets, entire assets is if not up to the 1 CR, then you cannot. As simple as that, right? So like for example, let's say rich people, I would say rich people who are ready to
high
take
net
a
worth
risk
individuals.
and who are eligible for this particular for investment pattern or investment theme, only those can invest in private equity funds. That's what I said here, private group of people. So who let's say who are ready to take a risk, it means common people, they cannot take risk, right, with a 500 or 600, and even which is not allowed to invest. So here you require minimum 1 CR or 10 million to be a part of this private group of people, and then you can invest into this particular funds, private equity funds.
It's only for individuals, or companies also can, like,
For companies, they can form their own family houses. Adani has
okay.
own family offshore onshore trust, right? Reliance
Yeah,
Group has
okay.
their own funds. Tata Group has their Tata Trust. So most of the corporation, they have their what I would say, their in-house private equity funds. Go
Okay.
and
High
check
net
it.
worth
Reliance
families.
Group, they have invested around 52 companies. How they have invested? They are saying they have invested through open equity, but few of the companies still, those are like private limited companies. Ratan Tata also, they have invested around more than 250 companies. How they have invested? Now they have, see, they have a liquid cash with them, right? 1 lakh crore, 2 lakh crore, 3 lakh crores, 10 lakh crores. So they don't require to participate in like this. They can form their own fund, and that is called family funds, right? That is called family funds. Family, it can be a hedge funds, it can be a private equity. They can also form a fund of funds. So it means instead forming different funds, they can directly invest in different funds. So that comes under your family funds or trust, where they can form a trust. If I take the example of pensions, right? Pensions bodies also, the pension, it means pension or provident funds, they also form their own funds. If I take the example of LIC of India, why LIC of India will invest through private equity funds? Go and check it. LIC has a portfolio of around 500 companies. So it means LIC invests around 500 companies across globe. They have their special body who manage everything, because they received premium. They are into insurance business, so they have formed their own trust or they have formed their own AMC, and they can manage their all assets. LIC has its own. Private equity fund, it is again private equity funds. Let me tell you something. What I have seen means I have around 150 around 150 private equity funds that I'm managing under my supervision. Around 150 private equity funds. But here hardly that I have seen the individual names. Here I have seen hardly that individual names, person names and all. Most of the clients are like colleges, universities, then even family houses. So they have invested in private equity funds, or they, for them, like separate funds, let's say created for a different universities, for a different family houses or business houses. So I have seen that also. Because retail investor hardly they invest, and the investors like actors or cricket players. Recently there was a news like Shikhar Dhawan launched one venture capital fund in Dubai, infrastructure fund. What I have seen, like he launched it. So it means now even the youth or cricket players or YouTubers, they are also getting aware about all these investment patterns and all. So they can form, means 10 YouTubers, 20 YouTubers, group of people. Now here you can link, they come together. Let's say 2 to 3 family businesses, they come together. 2 to 3 universities, they come together. Business houses, they come together, and they can hire people, they can hire investment managers, they can hire private equity funds to manage their assets. And then if they hire, it means, of course, see, if let's say if I take the example of Tata, if Tata invest in any private equity funds, then Tata's investment would be very high. Let's say hypothetically I'm just talking about 1000 CR. So they required the institution who can provide accounting and reporting services also. Private equity funds or hedge funds, that is not their core field where they can offer accounting and reporting services. No. And that's what your fund admin job come into picture. Your fund admin job come into picture, where that fund admin plays a very crucial role. Kind of, if you see AMCs, private equity funds, AMCs means who can manage the assets. Who can manage the assets of that particular funds. So here AMC raised the fund. AMC raised the fund. AMC raised the fund from rich people, rich or private group of people. And then AMC fund manager, they manage it. So the point here is they need someone who can provide fund accounting, reporting, compliance, regulatory or tax services, because they are rich people. every month, every quarter, every year, they will have to pay the tax liabilities to the government. And that's what they need, dedicated institution who can work on their accounting, who can work on their tax planning, who can work on their compliance, reporting, auditing, means everything, because as a AMC, their core objective is to find companies to invest, not to offer accounting and reporting. And that's what AMC and rich people, they come with the other institutions which you call fund admin, like Citco has own funds as well, and Apex, means who want to provide this particular accounting, auditing, reporting, compliance, depository, trust, or any clearing corporation kind of services. Then they can form their partnership, means this the private group of people and AMC, or let's say fund manager, these two can form limited partnership agreement or limited partnership, that you can say. They can form limited partnership where their business activities, means all operating activities, will be managed by the fund admin, including accounting, reporting, quarterly reporting, your trade processing, middle office operations, reconciliations, position reconciliations, stock reconciliations, your any kind of processing activities, if you see, that all will be monitored or managed by the fund admin. And that's what fund admin charge their different fees. They charge admin fees. And if you see AMC, asset management, it means here they manage assets, and that's what they charge management fees. Right? So they charge the management fees. AMC charge management fees. Now your question would be like, sir, in any case, have we seen like AMC and fund admin was same? Yes, there are companies like now take the example of investment banks. Now, if I take the example of BNY has its own separate units, that is AMC, Asset Management Company, and they are managing their funds on their own, and that's what they hire for fund accounting roles. There are institutions, they don't want fund accounting and reporting business line. Why? Because their main core objective is to manage the assets and to make the alpha. Then that doesn't make any sense to hire people to set up a business, then to also charge 1 or 2% or 0.5% or 0.5% fees, admin fees, and for that equip or manage all the sources and all, that nobody wanted. Instead, that they'll make here 2% or 1% after negotiation, that is enough for them. They'll only offer investment management services. That also happened, right? And there are institutions. So it means like, why then Citco, Apex come into picture? The reason is they only offer dedicated accounting, reporting, compliance support to the different funds. That's what those institutions come into picture. And here the auditing fund admin institutions role is kind of auditing firm, guys. They every year or every at the end of the quarter, or maybe let's say year, right? If you have a package of more than 7 to 8 lakhs or 10 lakhs, then we we reach out to the CEO auditing firms, we request them to file the tax files and all. Why we do this? Because tax liability is also important, to pay the taxes on time, otherwise government bodies or tax bodies will penalize you. The similar way here also happened. They want the institution who can provide end-to-end support. Fund admin rules and responsibilities and tax audit firm rules and responsibilities, which you would see same. But the difference is tax auditing firms, they work for a retail investors like us, and fund admin firms, they work for institutions and rich people. That's the difference. Otherwise, there is no difference between this particular admin and audit. Right? Here, one additional service that they are providing, kind of depository or any other depository as well as deposit or safekeeping services nowadays that I have seen. Fund admins do also provide security, safekeeping, or agency or agency or custodian services also, right, on top of it. Otherwise, there is no difference between normal CA auditing firm and fund admin firm. The difference is only product. With the fund admin here, that you would see hedge fund, private equity, or any other fund of fund product, and with the normal auditing firms you would see the retail clients. And that's the reason nowadays fund admin, if I take the example of NAV Group, if I take the example of Sudarnia Group, if I take the example of Intertrust, they are hiring CA interns or CA or CPA people only. Most of the time, or most of the cases, they are only looking for candidate who have completed their at least CA intern or CA or either CPA or any accounting program. The reason is there is a similarities between this your auditing and fund admin activities. Okay. Any question so far? Come on.
Sir, duration will be mostly like 10 to 15 years, like if they start a PE fund. So what will be the possible lifespan in which they will be going to liquidate that?
Standard duration is 3 years, but they can set up a different cycle for a redemption and all. Redemption, it means not, see, from a client side redemption would be different, and from an inside liquidation would be different. So regulator will suggest to at least liquidate all the assets within a 2 to 3 years of time span and then form a new funds. But standard duration would be 10 years, but depends on the investment instrument as well. That's what, let me just I'll now jump on the types as well. So now just let me know if you have any questions with regards to this. No question? Okay. So if I take the, if we discuss about, or if we talk about private equity types, how many types that we have? So here private equity life cycle starts with your venture capitals eventually, right? VC, venture capitals. VC means venture capitals. Private equity funds, they can form the venture capital fund where the VC can provide funding to the late stage startups. VC can provide funding. VCF offer funding to the late stage startups. So for example now Byju's, which is a late stage startup. It's not a startup, it's a late stage startup, right, which is at a late stage. If Byju's required any funding, they can approach to the VC. Correct? So this is the one form where that you would see private equity, they can form venture capitals and they can provide fundings also. Apart from that, private equity funds, they can invest through special purpose vehicle. So this special purpose vehicle, it will be created for, specially for that, I would say, banking or financial businesses, banking and finance businesses, or especially who are in lending businesses. If any institutions, they are in a lending business, they can approach private equity firm to form one SPV and provide funding to their support, where SPV can sell the securities, and we'll discuss, means we'll have a detailed discussion on SPV part also, right? But here you see where private equity can form one special purpose vehicle also to provide support to the banking and finance businesses or lending businesses, where SPV will provide direct funding to that particular institutions and will take the control of their assets or cash flows, and that's how they can again convert that cash flows into assets, where they can sell out those assets to the different investors, they can manage it out. Or apart from that, if the private equity funds, they don't want to invest or they don't want to manage any kind of activities as such, then they can directly invest into SPV, special purpose vehicle, through ABS, MBS, RMBS, real estate mortgage backend securities, real estate commercial mortgage backend securities. So those are the instruments where directly that private equity funds, they can invest through those instrument also, that comes with option, right? Then third option would be, or where they can target to invest, or that's how they form the different funds as well. So that depends, means how they want to keep the structure of that particular that particular pool or fund. Here then you would see the structure would be kind of where they can provide leverage buyout, or buyout, the word which you see, but buyout or something kind of which is again related to the buy out. So leverage, it means fund. So provide funding to the business, directly purchase the assets of that particular business and provide funding, where they don't want any kind of official or relationship with the board or management. They are interested in only assets. They are interested in only provide funding on the standard interest rate kind of things that you would say, maybe 7%, 8%, 20%. So that's how private equity funds, they can directly provide funding to the businesses also. Recent one example with, I hear that you would see Carly Group, which is again private equity group, they invested in Yes Bank, where they purchased their entire bad assets around 8,000 crore, and they transfer 8,000 crore liquid cash or leverage to the Yes Bank for managing their business operations. That was kind of leverage buyout or leverage fund facility, where Carly Group that offer to the Yes Bank, right? So where you would see this type of structure also. You check the, see, while working on transactions, that doesn't make any sense or matter for you guys, because you check the number, how much amount was issued, you check the notification for which account that you have received, or on which account that you have received fund, and your job is done. Just you verify it and record that amount as a commitment call, or as a commitment that you have received, or distribution that you have paid, or whatever the interest amount which is defined on that particular document, and your job is done. So behind this particular transaction, what exactly happened, how it has been executed and all, so that is something different story. So 90% people, they won't be aware about it, what happened exactly. Their actual negotiation happened. So since I registered my company as a private limited, so I also received several calls, because I have registered on the different sites where we see the venture funds, or we see the seed funding firms, we see the investors. They ask for statement, financial statements, P&L, the other documents. So last week that I had one of the deal from that guy who's from Mumbai. So he was interested in my business. So he was saying he's ready to invest 10 lakhs. So if you can just disclose the P&L, how much profit that you have made throughout the year, and what about the debts and all, if you can just disclose each and everything, I'm ready to invest 10%, 10 lakhs with 10%, right? So if you see, so it means Why I'm giving you this background, in a background, that you would see a number of activities that happened, and then after that execution happened on paper, right? Before that, you would see a number of other things also required. Your lawyer is required, that's what legal fees come into picture. You required middleman, that's what middleman commission come into picture. You required the the panel who will work with you to execute this merger, acquisition, or any buyback, whatever that you would see the structure in place. You required entire team, and that's what other expenses come into picture along with this deal, along with this normal documentation that also we charge, calculate, and record it in the books of fund, including traveling expenses, including your phone bills, including the other partnership conference expenses. I have a list of expenditures, I'll show you that also on paper, that I would say I have it. But those expenses also comes under, sometime means after doing hell lot of things, so you might see at the end moment this deal got cancelled. That also happened, where we call it as broken deal, that also happened. So it's not easy to execute deals or to discuss within a quickly 1 minute and yeah, let's done. But from an accounting aspect, you don't care about the background, as simple as that. What the matter is, or matter that for you guys is the numbers. You record the numbers in the books of account. You check the interest rate. You check the instruments types and all, and then after you record it in the books of account, and then after only you would be able to calculate the accrued interest on that particular investment on a monthly or daily basis. On the basis of that fund, whatever fund that you have received, on the basis of that only you can charge the management fees, right? So that matter for you guys. But yes, so you would see all these types also. Apart from that, the one of the type that you would see means leverage, SPV, VCF. After that, there would be one of the type where private equity fund can directly purchase position, right? Directly purchase position. So where we call, then we can call it as that management buyout. Management buyout. Management buyout, where directly you can let's take the example. You guys are private equity investors, or you guys are private, you have invested in private equity funds, right? You are here as an investor. As an investor, let's say you're here, private equity fund, so that reach out to the investors, and I'm here GMT Academy. I'm looking for a 10 lakh. I'm looking for a 10 lakh valuation. Let's say I'm holding 100% ownership at the moment. Then GMT, private equity fund can communicate with the investors, means you guys, where the private equity fund can demonstrate this deal, where they have a deal where the GMT is looking for a 10 lakh investment, right? And if this deal get executed, then private equity fund will execute the deal. So let's say investors, they are not only happy with the leverage. Along with the leverage, that investor want the official position as a director. So it means along with the 10 lakh investment, so where investors can buy the official position as a director in GMT Academy, and this is comes under your management buyout or buyout. with funding. So the director comes on their board, and director can utilize that 10 lakh as per their the business strategies or plans and all, right? So this is how your management buyout structure works. Management means, always keep in mind, so where private equity fund can appoint 1 or 2 directors on the board of GMT Academy, and then they'll take the control of few activities. See, ultimately they are providing funding. So they'll take care of it, how this fund can be utilized and for which purpose, right? So that's how they can streamline the business operations, or whatever the whatever the business has a problems or business is facing problems, so they can work on it even. So this strategy we call it as management buyout. So one was directly provide. If they directly only provide funding, then that would be your leverage. So they don't want any position. They want only GMT want only fund. Then investor, if they offer only funds, then that would be the leverage buyout. Only they wanted to provide leverage. And leverage, how they can buy out then? Maybe let's say preference equity, through preference equity, bonds, loans, or any kind of obligations through which the investors can invest, right? Through which investors can invest in GMT Academy. So that's the way to have a deal in place, and that's what these instruments come into picture when we talk about private equity business, right? When we talk about private equity business, and try to understand it, all the instruments has a long-term nature. All instruments are illiquid. Illiquidity means that comes with maturity. Easily you cannot find any buyer and seller, right? The market, bond market or loan market, or that other obligations or preference equities, go and check the market. It's not kind of highly liquid. It's not kind of FX market. It's not kind of any other market kind of very immediately you can quickly buy and sell out. No, you cannot. You require middlemen, you require agencies who can provide support to you. Then again, agency will approach to their agents or their nexus or network, and then after the buyer and seller, whatever that you're looking for, that will be fine for you. It's a lengthy process. It's not a liquid one, and the nature of that particular instruments is illiquid or long term, and that's what that affect on the investment types also. Apart from that, we're gonna discuss other things as well, but let me just complete these types. You can note it down if you want, guys. The last type that I just wanted to highlight about here is mezzanine or mezzanine, something that we call. Exactly, I'm not able to pronounce it. Let me spell it out. The sixth strategy, mezzanine something or mezzanine something. So here mezzanine, let's say mezzanine, go and check this spelling, okay? So this particular strategy, where again, so if you see any work in progress project, for example, there is a construction house and their work is under construction, right? The work is under construction. So private equity funds, they can provide funding. PE funds, they can provide funding to the such a working project, or under construction projects or under developed projects. They can provide funding through their mezzanine investment strategy. Here you might see not only one investor, but or not only from one scheme. They can pull that money from different schemes also, or else not only one fund. So here 2 to 3 funds also they come together. Let's say PA, PB and PC. So they also come together. The reason is, here the risk would be high. Here the risk would be very high. The reason is, project is already underdeveloped or under construction. It means after completion, what if that particular construction company or maybe it can be any project. Let's say that particular project is not able to generate the money or alpha, then entire money would be in risk. So that's what here 2 to 3 investors come together, or maybe 2 to 3 funds come together, and they can offer funding to the projects which are in a under development or which are in a work in progress status. And if you see that funding we call it as mezzanine financing or mezzanine financing. You check the spelling, please. Don't criticize on it because I'm not able to recall that exact spelling. It should be mezzanine. Check it again. Okay, so this is also one of the strategy where private equity funds, they offer funding to the work in progress or underdeveloped projects. But as an accountant, how it works in system for you, only the deal size, let's say commitment, because for you it's a commitment amount. Commitment is, let's say, 10 lakh that you paid, or 10 million or 1 million, whatever it is. Let's say 1 million that you paid. So for 1 million, that is matter. 1 million and interest payment on 1 million. And whatever fees that you have incurred on this particular deal, let's say assignment fees, agent fees, that is only that, that affect on the accounting books. Rest, how this framework that will be executed in backend, it's a marketing job. It's kind of where the fund manager from ABCD private equity, they'll come together. Let's say this is Yes Limited. So here board, they'll come together, they'll negotiate, they'll discuss, they'll appoint one legal body or lawyers, and then finally that paperwork will done. Right? It's a paperwork. It is all about paperwork. Everything that will done, and then this board of directors from Yes or board of directors from different private equity, then they'll sign the deal. After signing the deal, then your job come into picture, where they send the notice or where they send the draft or documentation to the accountants, where you can check. So for you, out of entire documents, for you the important is only contract note, funding memo, or pricing letter. You would see hundreds of pages with the different terms. But for you is, as an accountant, you need to worry about only pricing letter, funding memo, and contract note. How much was the funding? How much was the that particular rate of interest on that particular deal, or spread, or delayed interest, cost of carry, assignment? For you, only that information is required, because that information is required to do the accounting. Backend framework, we don't require anything as such. It is just scripted work that you would see, where board of director of S Limited or PE, they'll come together, they will have a back-to-back meetings, discussions, negotiations, everything that will be in place, and then after they can execute the deal. But after execution, after signing, then your job come into picture. Why your job come into picture? Let's say if you're a cash team, then on the basis of funding agreement, that you will have to release the cash from XYZ fund account, or maybe from, if you're, let's say you're at a bank side, then you will have to release the fund from that particular private equity's bank account also. So that depend. As an accountant, you will have to refer the same, where you can update your system. As a reconciliation analyst, you can refer the same funding agreement and you can check it out. How much amount that was on the document, how much amount is recorded in the system, and how much amount that you have received on your bank account or paid from the bank account. So that's how your reconciliation also will work in that direction, right? So for you, the only technical things matter, but for this framework, this is for an interview, for interview discussion and all, where you may expect a lot of questions on all these areas, where you can prepare small examples, because in an interview, so you would see only 40 to 45 minutes max to max for all this discussion. And if you have already prepared few examples, small examples for each term, then you would be in a better position to explain it. Okay. Any question, any doubt, anything that you would like to ask? Okay, anyways, so I'll now so types of, so these were the strategies that you would see instead types of private equity funds, strategies of different strategies of private equity funds investment. And the officially we have only two types. One is PE funds, means from a technical aspect that we are talking about now, that was from investing prospectus or that theme, and now this should be from a technical, from a accounting perspective. We have two different types private equity funds. One is close ended and another one is open ended. When we say open ended, so here you might see hybrid funds. It is a mixture of hedge fund and private equity. It would be mixture, and that's what here you would see management fees 2% that we charge on the basis of AUM, asset under management. And here close end, it means purely that would be your, or under close end I would say purely those would be loan funds, loans or ABS and MBS fund. Purely means purely investment, that would be from that area only, loans, ABS or MBS. And other one would be side pocket investment. And here that you would see fixed duration. Fixed duration, it means only quarterly that you would see some change, some sort of change. Maybe that you will get the notifications for interest payment, maybe that you will get some fees or any other expenses details and all that you need to record. Otherwise on a daily basis you will not see any activities as such. Quarterly that you would see, because quarterly that probably we sell the loans, quarterly we purchase the ABS, quarterly that we receive interest payment on loans, ABS, MBS. And in the side pocket investment also same. But here the purely nature would be close end. Close end for the instrument nature is itself that if you see that minimum duration is required for 5 years, 2 years, 3 years, 10 years, 20 years, right? And that's what your investment will be closed for that particular duration, right? That particular duration. These are the two types where you would see. But if you see, trust me, this part, loan ABS, MBS, which is a quite sensitive part, and as well as complex also. And here hybrid, it means here you might see daily accounting. You don't need to worry about much. You would see mixed kind of things, accrued expenses, everything. Accrued expenses here, that also you would see. But the trading pattern, everything that would be kind of little different. Even the valuation, in terms of valuation, pricing also, that you would see something different structure over here, because most of the securities would be L3 securities. And with the hybrid L2 and L1 that you might see, L1 or L2 or sometime L3 also that you might see, level 1, level 2 or level 3 securities. But here purely that would be your level 3 securities. And side pocket investment, it means for one fund you would see two different NAVs. For a same fund from a same account, but you would see two different NAVs where that fund might create sub fund from the main fund. We'll see that structure also. But side pocket, it means it is for a risky investment. It is purely for a risky investment. For example, if I take the example now at the moment, like let's say Afghanistan, right? If any private equity fund invest in the junk bonds of that particular government, let's say Pakistan, Afghanistan, Sri Lanka, or Bangladesh, all the Asian countries around the India, right? Just go and check it. Bhutan, most of the countries they have declared either bankrupt or maybe they are on the way of bankrupt, except India. So if they invest into those funds, then the instruments or the government instruments and all. So here the possibility of the return of capital within a very 2 or 3 years is, it's not possible at all at the moment, because government itself, they are looking for a fund, they are looking for a 10 or 20 years duration. So it means if we invest in those funds, so where you cannot record that investment with your normal investment, and that's become your side pocket investment. Side pocket it means risky investment. In a normal investment, you would see, or on an official document also that we mention here, that you would see par investment. Alright, here you would see par. Principal at risk is very low, so that would be a par investment. And when we say side pocket, that would be your distress assets. On agreement itself they mention it, distress asset. Distress, it means that asset is under lot of pressure or tension, and the recovery of the asset which would be very low. And here, of course, when we say side pocket, it means they offer high return on it. The investment instrument that also the government offers, or private even companies, they offer on a discount, right? If you take the example of SVB Bank, they tried to sell it out. Most of the, I was shocked because in 2022 they got the many awards. So they were at a sound position, means financially also. I was checking their history and all, how this suddenly happened. They had everything, means kind of they were at a better position, but suddenly within a 2 to 3 days, just see that particular case, then you would realize it. But now suddenly that par assets become distressed assets. Within a 1 day, that stock price directly fall by 60%, 300 to around 100 something, that which is at the that particular security prices which at, or might be 50 to 60% downfall that you would see the tomorrow also, means Monday, in that particular assets. But after that, if anyone purchase this particular assets, that or stocks of that particular company, then that becomes the distress assets, because stock is the representation of company's assets or bank's assets. And that's what, if you invest in those stocks or those securities, then that becomes the distressed assets. And that's the reason you cannot maintain the side pocket investment and normal investment together. So it means same fund will have to, if I take the example of any private equity fund or even hedge fund also, they maintain it. So that depends on theme, how they want. Private equity funds, they can create the separate pool for par investment and separate pool for distress investment. Distress investment. Distress, it means risky investment. Risky investment, where they raise the fund, for only that risky instruments only. And here purely that you would see close and for a longer duration. And here also, what I have seen, like in a practical way also, the NAV which you would see, they offer NAV on discount. If the actual NAV is, let's say 100, then they offer at 50 to the investor. So it means they offer a lot of discount on those that NAV part also to the investors. The reason is your investment would be in a risk, huge risk. high profit, high risk kind of game with a distress investment. Par, which is at the risk level that you would see moderate, right? For a same fund, you would see two different NAVs. So it means you need to disclose separate NAV for this fund and separate NAV for here. But eventually fund is same. There is no difference in fund. But you would see two different NAVs and two different your PNL also. So everything that you would require to apart along with your fees details also. So you might see here 1.5% fees and you might see here 3% fees. So that depends, because here the economic activities would be quarterly that you required, something that you need to do in terms of accounting and all. Then that doesn't make sense to charge 5%, 6% fees or 2 to 3% fees even, right? Only quarterly that you will see activities, and only quarterly, see, it means automatically, so you don't require much of people to maintain that books and all. So you can hire one or two people who can manage everything, right? So that's how you would see the structure in place, and this structure we required or we check it in the private equity business. So most of the private equity business, that would be your closed end funds, most of that I'm talking about. But here you would see hybrid structure also, and there you would see AUM based, asset under management based, hedge fund, hedge fund kind of fees that you would see, where we actually calculate incentives and everything, right? But apart from that, for a distress investment, par investment or closed end funds, we charge fees on the basis of commitment. Commitment based fees. Commitment based fees. Once you raise the commitment, let's say you raised 1 lakh or 1 million, then you can charge when you raise it, then only you can charge it 2%. So once you received fund, along with that you can also ask for this 2% management fees also. That becomes your commitment base. And then after, directly you can charge your catch up, then carried, whatever terms that you have. So that we'll discuss in next session, right, with the practical examples and all. But yeah, so I'm done with this theoretical part. Commitment here, it means we'll see the commitment, there are a number of key terms as well, so we'll see that as well. So we'll continue with this from this commitment portion in the next session, right? But here the other closed funds or distressed funds, they charge fees on the basis of commitment. Keep that in mind. So we'll continue from here. So I'm done with this today's session. So let me just check it, the point, whatever that we highlighted initially, have you covered those or not? And then you can shoot up your questions. Yeah, so almost we have completed with all, but as I said, like important docs will cover, and this portion also will cover in the next session. So we have a ready presentation, but we require time, at least 1 hour, to discuss that portion also. Otherwise that doesn't make any sense at all to spend less time. Private equity fee structure and all, so we'll see that in next session, how this management fees works, general partners, limited partners fees, right? So now you can unmute and shoot your questions, guys.
Shiv, can we just get a more brief details about contract note, pricing letter, and trading note? Like what exactly details are there and how is it important for
So this,
accountant?
yeah, this was just initial discussion. Okay, so when we'll discuss more about those terms, so I'll show you the examples also. So at the moment, just keep that in mind only. Otherwise, if
Okay.
I don't have examples, if I explain theoretically again, but still, if you want, see the contract note, it means it's a pricing details in short. So what we required is the details, right? Let's say principal amount, the when this particular amount settled in the bank account. So that details we required. Private, I'll give one example about private equity business. Are you aware about home loan process?
Yes.
How that works, home loan?
So basically, the bank and the individual they sign a contract basically with
Yes.
uh,
If
like they yeah. So the individual will take a loan for a specific period of time, and in return he will give that like a you can EMIs on monthly basis with the interest amount whatever has been specified in agreement.
bank and you, that any individual who want to build the house, right?
Yeah.
So here, bank signed the agreement, and bank also provide funding, right? Let's say
Yes.
1 million is the funding or 10 million is the funding. So every time bank will provide funding, let's say 1 million, 1 million, right, out of 10. Depends on the progress of this particular work, right? Because most of the time you would see the structure for a work in progress or underdeveloped projects, or the projects where that particular person or individual want to develop this project or build this project. That's what they are looking for a funding. So here this would be your total commitment. So if you see, bank never charge interest on this total commitment, right? Do they charge? No,
Yes.
correct? They charge the interest on this amount. In the similar way, in a private equity, let's say total commitment was this 10 million and you have only received 1 million, then how can you charge the particular fees on 10 million? So it means you cannot, you can only charge fees on 1 million. And the similar way in your accounting books also, while calculating, because that principal comes with interest payment, that particular principal comes with interest payment, where we pay the interest payment to the investors on their investment, right? And here that you would see same on loans also, you would see, go and check if you have any personal loan or any kind of loans, that document where you would see schedule of investment, everything, interest rates and all. So that documents we call it as pricing letter or funding letter, or contract note, which defines the global amount, global or total amount, that defines the global or total amount. Total amount, let's say 10 million, right? Then contract amount at this point in time, or might be settled amount. Those are the wording, guys, right? Let's say it is 1 million. Then interest, let's say 8% for per annum. Then status of this particular funding, is it with it is received or not, or how it is, right? Or if it is received, then bank account details, that is required. Currency, let's say USD, right? settled time or date, the name of the counterpart, name of the investor, who paid it, the bank name. So all this required is required. This details is required, and if you see, mm, it's let me just check the notice if I have any. So I had one example, otherwise I'll send you that on WhatsApp. Maybe in hedge fund it should be, if it is master feeder, equalizing training, hedge fund book, notice. I'll send you that in a notice format on WhatsApp. Just check it. So how this notice format looks like.
Okay.
So I had one practical example. So I'll share it to you on WhatsApp. Just check it.
Okay.
Or I'll share that in group. Everyone, you can check it how that funding memo looks like and all.